Everybody, welcome to another packed episode of VCTV. We got an incredible crew here today to talk about one of the most popular topics through this series, the fintech and blockchain space. So my name's Alex McDougall. I'm the co-founder of something called Bicameral Ventures out of Toronto. I'm filling in for the cartoonishly oversized shoes of Kyle Ellicott today. He's off celebrating Columbus Day somewhere. And so today we got, there's a ton happening in the space right now, and we're talking about fintech and blockchain today. There's some really interesting pieces of news that have come out recently, some really interesting trends. On the call today, we've got a mixture of entrepreneurs and investors, so builders in the space and the people who are deploying the capital to help build that space. So we want to talk about where the opportunities are, how we're looking at different investment vehicles in the space, specific pieces of technology, and we'll cover a wide array of topics. So big panel, so let's dive into it quickly. I'm going to go around and do a quick introduction, talk a little bit about where you're spending your time, and then we'll dive into some of the more specific opportunities. So why don't we start with Alpesh?
Hi, I'm Alpesh Doshi. I've been in fintech for over 20 years. Building businesses around fintech and doing on-exec work and fintechs too. I think we're still in the early days of the golden age of transformation of fintech, and obviously in the early days of blockchain. So with the nature of COVID, I think it's pushed some of these things back, but also accelerated other things. So exciting times in both of those areas.
Fantastic. And Jin?
Yeah, hi, my name is Jin. I work with Apis Partner, which is a London-based global investment manager with a billion AUM. We specialize in investments, democratizing access to financial services. And we invest across, especially in the emerging markets, in early to growth stage businesses and help them scale. And we work with some of the global insurers, banks, and ecosystem players and manage their customized CVCs on their behalf. Today, I'm looking at a lot of emerging market companies rebuilding the tech stack or the financial service stack. We benchmark quite a bit of the avant-garde companies in China, for example, to see how it plays out in especially emerging markets. I've been in crypto since 2014. I was in the Solidity hackathon at that point, which I got in. And so I've been looking at the space, but I look at it purely at this point from a CFI perspective.
Interesting. And the CFI DeFi divide is something that's top of my mind right now, and how companies are threading that needle, where we can get the benefits of actual DeFi, where there's the safety net of CFI. We can dive back into that. I'm sure some of our guests have a lot to contribute on that side. Let's keep moving through the introductions. Sahel.
Yes, hi, good afternoon, good morning, depending on where you are. I'm the founder of Financial Network. I've been in financial technology before we called it financial technology, so since 1997 during my uni years. So dot-com entrepreneur, moved into investment banking. And I've been in the blockchain and the crypto space since about 2015. And one of the reasons I founded Financial Network was to identify digital finance and fintech opportunities. We're usually early stage investors and strategic advisors to companies primarily in the UK, the MENA region. And what we're really interested in is, and what's been, I guess, holding us back is the regulation side of the business. And I come from a conventional background, and being an investment banker, actually being originally from Canada. I've been registered with the Alberta Securities Commission, the Ontario Securities Commission, and I was one of the few people in 2015 and 2017 that I was cautioning people about these ICOs and saying, you do realize it's a criminal offense to be raising capital without registration, and few were paying attention, and now that's coming to haunt a lot of people. And so what I'm really interested in is finding opportunities and being able to capitalize and not get caught up in, I guess, the hypes and the hype cycle.
Mm-hmm. Yeah, interesting point. And regulation obviously is top of mind, especially in this specific niche of the crypto industry. And I think there's opportunity in regulation as well. If you can put the pieces in play to be the one who's first through the door from a gold-plated white knight perspective, then you can really tip a market. And you mentioned Canada, a very, very heavily regulated place. And we've seen some people sort of sneak through different regulatory paths and really take over a lot of market share because being there first. But set against the move fast and break things approach that a lot of us have taken and generated huge market share that way as well. So we'll definitely circle back on regulation as well. Jose?
Hi, so, well, I'm Jose Graca. I'm a serial entrepreneur. That's how I like to see it. I've been a business angel for 26 years now, since 1994. I've got into venture capital for more or less 3 years. But the issue is that I like much more being an entrepreneur than being an investor. It's much more exciting, but maybe that's me. Today I am essentially working on what I call Fintech impact. That's so social solutions which touch the Fintech space. I've been developing financial technology now for 20 years, more or less, since 1999, so that's 21. And I didn't come from a tech area. I initially, I'm a finance guy. I came from consumer products. I like to build brands. So it's, yeah, it has been quite a very nice experience all these years. And I'm looking forward to this panel today.
Awesome. Me too. And I think there's the divide between entrepreneur and investor, but I actually think that a real investor, especially in this space where even the vehicles that you're looking through at investing through are changing on a minute-to-minute basis, you almost have to take an entrepreneurial mindset to investing. You're creating new models, you're creating new products, you're creating new fund types. There's a lot of creation in this industry, even from the investment side, which is one of my favorite parts about it. Matthew.
I'm Matthew Lemerle in San Francisco, Silicon Valley, 35 years. First career running, senior consultant running the practice, the fintech practice and financial services practice globally at Carney, and spent time at McKinsey, Booz. So the clients back then, Bank America, Wells Fargo, Visa, the world's biggest financial institutions. 20 years ago, became a internet and fintech investor. And today we run the leading blockchain venture fund of funds. So we're investors in about 200 blockchain companies, both on the if you will, the B2C side. So we're investors in Coinbase and Kraken and Circle and Uphold and so on. Also on the institutional side, where I'm chairman of Securitize and vice chairman of SFOX, where we're building out blockchain-enabled technology to support institutional and pro traders and so on. And then my wife is one of the world's leading public company financial services board directors. She sits on the Silicon Valley Bank board and Fiserv, and just rolled off Royal Bank of Scotland. So for us, this is our life: internet, fintech, blockchain. It's what we do, and very excited to be here with all of you.
Fantastic, thanks, Matthew. Really interesting, and obviously you've been in the space for quite a while in the construct of blockchain venture fund of funds. Nobody has the exact right model yet, and so looking at it even almost from that entrepreneurial mindset of let's spread out the capital across a whole bunch of different strategies to tackle different investment types, different investing styles, different technologies, different aspects of this, because it's really hard to factor this industry down to anything because it's so foundational and so infrastructural. So super interesting approach. I've looked at what you guys are doing a few times as well.
Yeah, well, so actually what we did, and thanks for asking that, Alex, we lived through the internet. We were in the right place at the right time. We knew all the players, the Sequoias and the Kleiners, but we didn't have a lot of capital back then in the 90s. And this time around, seeing this space emerging, we sat back and said, what is the right way to invest in a global phenomena like this? And you need to be massively diversified. You need to be in Asia, North America, and Europe. And you need to be highly efficient, investing with the best investors. And we just spent the last 6 years getting to that place. Alison chairs the advisory board at Blockchain Capital. And we are investors in, I think, 15 or 18 of the top 20 blockchain VCs.
Very interesting. Thanks, Matt. Gary.
Can you hear me?
We sure can.
Yeah. So I'm Gary Fowler. I'm serial entrepreneur and investor. Now 16 companies under the belt. I'm the CEO and co-founder of GSD Venture Studios. So we take operational roles in companies. I'm particularly interested in any type of the applications of artificial intelligence. I write a lot about it. I've written almost 80 articles on AI in the last year. And I do about 12 speaking engagements a week. So I'm always, it's great to be on the panel here. And, you know, when we take AI and blockchain together, it's a new world. And that's really where we're interested in the convergence and the intersection of where AI is going to have an impact. So it's great to be here. And I'm looking for the best. We curate the best AI companies in the world, use Silicon Valley as a port, and our goal is to take them out and dominate the space. I've been involved in 2 unicorns, by the way.
Nice. And Gary and I actually did a panel a couple weeks ago for Burning Man Virtual called Going Back to Go Forward, Scaling Human Integrity in a Machine Speed World. That was a walk.
That was great. That was really fun. Thank you.
Yeah, 100%. I mean, AI and blockchain is, you need the AI in order to run things at machine speed with any sort of core of integrity or any sort of ability to factor it down to a better outcome than just maximizing for dollars and cents. And that's really where we got into. One of the things we invest in from our fund as well is the AI and blockchain convergence piece. Mr. Mashinsky, how are you? It's good to see you. Give yourself a little bit of an introduction.
Yeah, hi guys. Thanks, Alex. So I think kind of listening to the other speakers, I think I will descend here and say to everyone that we made the impossible possible. We did a fully compliant ICO, filing with the SEC and FinCEN from day one. We raised the money from several thousand participants around the world. We invented a new category called interest income, which some of you call DeFi today, right? The first company to pay interest in kind and also pay interest in a different token. What Comp and Uni and all the other guys did later. And we have about $1.6 billion currently under management from close to 200,000 users worldwide. And my point about saying all of that is not bragging. The point is that there is a legal way, compliant way to do all the things that we want to do in crypto. And you don't have to skirt the law. You don't have to run offshore. And the regulators actually are not your enemy. If you sit down and talk to most regulators and you show them that you're doing stuff that is in the best interest of the users, Celsius pays 100 times more in interest than JP Morgan on the same asset. And we're not doing it because we're so good. We're doing it because JP Morgan is so bad, right? They basically don't have to give their customers anything. So when you explain that to regulators, they actually look at you as a solution, not as the problem. So let me pause there.
Awesome. Yeah, and we'll definitely get back into the interest space and into that 100 times spread. Because when we think about what are the tangible value propositions that make people willing to do the bare minimum of effort to lift up the curtain and look at the blockchain space, it's those 6, 7, 8% yield spreads that is one of the most tangible ways to get people to flip their thinking into something new, with the same fundamentals as the money market and the repo market, and with the same liquid collateral. Exactly what your point was, Alex. So we'll dive back into that for sure. Irina?
Well, it's a pleasure to be here. Everybody is such a superstar. I'm honored. Irina Litchfield, crypto superwoman. I am founder of Blockchain Cubed. It's a blockchain integration company. I'm president of Lumeria. Lumeria is where capital meets innovation. Basically bringing back small market cap to life is what I'm really driven by, and creation of truly global capital markets, democratization of opportunities, democratization of investments, all that great things. Pleasure to be here. Guys, there's 2 points of it. There's go, build fast, break fast. And then there is the integration through regulatory systems. And as you said, Alex, we're now living through the time when we can do that. So there's definitely both. There's place for both out there, but regulatory infrastructure now for crypto adoption is important. 3 years ago, years ago, I talked about need for regulatory infrastructure. But 3 years ago, I got booed, and people were booing at me at the stage. And then only 2 years ago already, we started having panels, and now it's a fancy thing to do. And now we actually do have regulatory infrastructure. But 3 years ago, we didn't, and 5 years ago, we didn't. And think how far we came. In 2013, the biggest question from investors when we were raising money for our Bitcoin exchange was, is Bitcoin going to be illegal? And now look at us, 2 public companies are diversifying their treasury into Bitcoin. That's how far we've came.
Yeah, great points. And we've finally gotten a retail facing, well, a little bit of a while ago now, but a retail facing ETF that can hold Bitcoin, and started to mash these new concepts into old wrappers that may not be the most efficient, but it is the way to bridge the gap for people to get exposure and get into this space. And I think that's one of the themes that we want to come back to, is how are we bridging that gap? Frederick. Oh, you're on mute, Fred. You are still on mute.
Double mute. Now we're better. Thank you. Yeah, mute and mute. Here we go. Frederick Sandvall in London. Really great to be on the panel. Good to be sharing panel with you, Gary, again. Just shows how active you are, not me. So, yeah, I am in the investment and entrepreneur space, very much sitting in the deal flow where we've been pitched a lot of things, including crypto, since the last 6-7 years. And I find it really interesting. I was just attending a think tank in the Parliament in London before they closed down for business, so to speak, when we discussed regulation. And it is extremely apparent that it is very confused, the situation. Regulators don't know how to deal with this. Leaving that to the side, I'm even more interested in the whole fintech aspect, which is not the main priority for today, and where I work for both lending and borrowing for accredited and non-accredited people. So pausing there, I'm born in Sweden, so now you know where the accent might be from.
Fantastic. And we just had another panelist join us, Noble.
Whoa. Good morning, everybody. My name is Noble. Hey.
Awesome. We're just doing a quick round of intros.
Yeah, apologize for being late. A little technical difficulties, but happy to be here. I'm the founder of LATOKEN Capital Partners. I've been in the investment space for about 26 years. I've written 7 books on trading, investing, futures, and options, and just happy to be here, and look forward to talking about the DeFi and fintech and blockchain. Some exciting things happening here.
Fantastic. Awesome. Well, so we're all got to know each other now for the first 20 minutes of this panel, and we do have an absolutely unbelievable panel. I mean, it's really an honor to be here with all of you guys who have accomplished so much. And so let's dive into it. And again, we're coming from a very diverse space and a diverse set of experiences, all sort of honing back towards this blob of a space called fintech and blockchain. And so I want to go around and really get people's views on, okay, we've seen DeFi explode sort of, I think it's 120x the amount of collateral that's been locked in platforms over the last 24 months. Before that, it was really the ICO craze. We never really had the security token boom that a lot of people were anticipating in 2018. So we've got these sort of various fits and starts of where dollars are flowing into the space. And I've talked about before of those tangible value propositions of the big meaty spreads that are getting people involved. I want to get people's opinions from your background and from where your interests lie. How do we get more people and more net new green capital flowing into this space? So Jin, maybe we'll start with you.
Yeah, I mean, so I have the benefit of looking at CeFi and DeFi, and I was also a money manager before, so I'll just integrate everything here. what you see DeFi is really a proof of concept. You can't scale these spreads because if you put 50 billion in it, the spreads will compress, right? So, and then the on-ramp and off-ramp, that regulatory aspect hasn't been set in different jurisdictions. And so, and there will be some blowups, right? So DeFi is coming up, but it's a circular economy at this point. What's important is actually you have this composability of smart contracts, and you can build basically Lego blocks. They'll be ready once you have more liquid markets, and that will integrate into CeFi, and they'll be all KYC'd and everything. Will enable you to do more seamless derivatives, a bigger market for that. I think it would explode more, actually start in the emerging markets, because the use cases are so visible at this point, just from a basic, just from a stable token perspective or stable coin remittances. The stack hasn't been built. There's no legacy resistance. So what Jack Dorsey is doing in Africa, he has a vision for that. I think that's where it's going to play out initially, because also the regulation is pretty weak there too.
And whether weak regulation is a catalyst for growth, I think is something we can probably spend a ton of time on this panel. Sohail, do you want to chime in on that point?
Sure. Again, DeFi is we've kind of in that market from as Jin said, one of the biggest challenges in coming from conventional investment banking finance side is the scalability. How do you and the other challenge then is how do we truly build decentralized frameworks, right, for DeFi? Because right now what we're essentially doing is I think in a way we're losing a bit of the core or the essence, or the reason that we're doing it is to be able to democratize access and be able to provide investors with a better return on capital, right? And then the other challenge I see is the correlation. All cryptocurrencies are so correlated, right? That as an investor, how much of my portfolio am I willing to put into DeFi versus conventional finance, and then we have the issue of being able to assess and the underlying assets and that whole bridge from real world assets. How are we actually and how confident are we in that process?
Yeah, I mean, interesting points, and I think scalability is something that's been touched on a few times now, and really it's the concept of a circular economy, and I think that's a really interesting point to this as well. The sustainability of this space is sort of tied to these more actual fundamental value economic drivers of who is borrowing. And obviously there's liquidity pools and different types of DeFi, but from a fundamental basic lending and borrowing platform, we currently have a lot of financial uses and short-term uses for borrowing. And we hear a lot about, okay, well, people want to, miners wanting to lock up their Bitcoin and earn cash and returns on it. Individuals who want to lock up their Bitcoin because they think it's going to go up by more than 12%, so they're willing to pay 12% interest on it. And I'm very curious as to A, the sustainability of that, and B, whether there is a growing seed of real, I won't call them real investors, but companies who are looking at this as a working capital solution that's cheaper than going out to the venture debt market or raising equity. When we can start to create those kind of 6 to 12%, that's a little bit more tied to non-financial speculation, which obviously is a huge driver of a huge driver of value and a huge driver of economics currently. That's, I think, is one of the keys towards scalability and stability on this side as well. And so I want to jump in a little bit to Irina, looking at this from the value creation side, or from the longer term value creation side, getting away from sort of the use cases of more short term financial pieces into and Jin and Sohail touched on it a little bit, the remittances, the more societal or fintech social innovation?
So I think that the most important thing that we must keep in mind when we think about the benefits of a blockchain technology is and how it can benefit other innovations as well, is a single source of truth. Okay, so the immutable ledger, that means decentralized platforms. So we need to invest more in decentralized platforms, right? So there's two things. One, as investors, we must seek through decentralized platforms because it will allow us to be able to actually use these platforms for the immutable ledger kind of functionality, right? As a private platforms, we can anchor into them and it's all great and wonderful, but the mutability there is the key, guys. That's what the world needs. And that's how we evolve other innovations as well. AI benefits from it if it's immutable. If it's otherwise, it kind of doesn't make sense. But anyhow, on another side is educating our regulators. Because again, the regulators, their whole job is to make sure that people are doing what they're supposed to do. And so if we can implement this technology for them and benefit them, then we'll see a rapid adoption, right? So these are kind of two ways that we must concentrate on it. Now, for example, Malta is figuring out how do they give an entity to a company that is decentralized. They haven't figured it out, but they've been thinking about it for several years. These are kind of like the cool challenges. But I want to encourage each and one of you to speak to regulators, to be transparent with them, because as soon as the better they understand it, the better policies they can pass. So then we can see mass adoption, because my mom is not going to go and participate in these vehicles, even if she has me as her daughter, right? Because she doesn't, it's just unregulated markets. It doesn't really work for regular people.
Interesting. And I think that regulatory wrapper that we've been talking about a few times, of the front end that works with those people, the moms and grandmas and grandpas of the world, is so critical to this sort of getting over the chasm piece right now. Jose, I want to go to you. You'd mentioned in your intro about more of the fintech and social innovation side. So we've talked a lot about nuts and bolts and dollars and cents. Where are you seeing the opportunities in this technology from a more sustainable or more regenerative future?
Well, first of all, I would like to say that for a lot of generations, not only for the baby boomers or for the X, but also for the younger generations like the millennials and the I generation, they have quite a hard time to understand how tokens work. And the way I see it is someday there will come a cryptocurrency out, definitely with blockchain behind it, either as a private environment or let's say completely decentralized, but definitely in another type of environment that it's easy for adoption, that anybody can understand. So if you give, let's say, a bill out, it's quite easy. You give a bill out, there's nothing to it, but people don't really understand. If you go to your bank account, you see that number there, right? You understand that it's there. So that's one aspect. The other aspect is I spent more or less building something with social impact, which basically will enable any person that wants to build up a business in a very fast pace, with or without cryptocurrency, can do it. And it forced me to go to Luxembourg, live there for 2 years, and have regular conversations with the regulator how to get it done. And during that process, we realized that it's a complete new world, that you need to get on board people that basically are in traditional banking. They know the regulations. The problem is that if you come up with something new, the regulator really doesn't know exactly how to handle it, even if they have a goodwill, and also if they have already teams in place. But essentially, you are going to get thrown to standard regulation sooner or later. And if you don't understand the standard regulation, you will never be able to get approval to get it out. So definitely, we need to give the regulator some time. I don't see the regulator as a bad issue. I see it as a positive issue, because we have seen all that has happened with these ICOs, right? A lot of money just simply got lost. A lot was applied properly, but the regulator, what it wants is that it wants to protect the small guy for losing his money in whatever he's going to put his money into. That's the issue. And even with, institutions like banks, which are fully controlled, it happens that they close down and the money is lost. So if you don't have anything in place, how would it be? So there's a big challenge in the regulation and how you're going to do it. There is a big challenge in what will be the future cryptocurrency. There's a big debate on this as well. I see AI as a must in this whole setup. Okay. And I also see that blockchain is very, very good solution. It's still very slow compared to traditional databases. So the way we look at it is that we have traditional databases where basically record very fast these transactions or whatever it is that you want to record. And we take a blockchain more or less like a permanent record, okay, to rewrite some of that data into a blockchain. So that's how we figured out. But there are two panel members here that I admire very much, and I would say they know much more than I do on this, which is Matthew Lemerle and Gary Fowler. So those are the real experts.
Well, I guess you can't throw it over to Matt and Gary without me throwing it over to Matt and Gary. So Matt, do you want to chime in on sort of the social innovation impact of where we're using this technology, and also the regulatory side, given your immense span of operations and scope?
Well, I don't want to repeat what everyone else has said, and I think a lot of the other panelists have said some really good things. I do think that financial services is a huge arena. We're talking about 15 to 20% of the world's GDP, and it impacts every industry. Every industry is involved in commerce and payments and transactions, and every asset in the world has to be bought and sold and traded, and all of that infrastructure is going to be changing. And I'm pausing there because that's the point, right? I think one of the other folks said it right at the beginning. Everything in the world is going to be changing because we're still operating the world's economy and the world's investments based upon 1970s and 80s mainframe-based technology. The regulators know this, so don't think the regulators are hostile to you. Rather think that they have to move carefully and they are trying to understand what they need to do and in what sequence. And it is true that some of the incumbents have been negative, but they're all becoming positive. It's just they don't want to have, entrepreneurial and disruptive companies take too much of their business from them. So they do tend to try and encourage things to move at a pace they can compete with. We sort of straddle the world of the past and the world of the future. In the world of the past, it's about building new technologies, new infrastructure to support established exchanges and banks and payment companies, and a lot of money can be made that way. But that's sort of like enterprise-focused technology. On the other side, the world of decentralized finance is, I think, very exciting. I don't think it's as new and novel as people think. I mean, we've been talking about peer-to-peer lending and peer-to-peer investing and even peer-to-peer insurance for 20 years in Silicon Valley. The really novel part of it is that we've been doing it through a centralized technology-enabled peer-to-peer, Prosper, Lending Club, AngelList, Seedrs, Indiegogo, Kickstarter, and now we're trying to use smart contracts and technology to take out the centralized entity. I think that that's very interesting, but I also think, as I think it was Jin Yong said, 8 billion sounds like a lot until you realize my wife's old firm, where she was CFO, manages 7 trillion. And then you suddenly say, well, 8 billion in DeFi contracts really isn't very much. Bottom line, if you're an entrepreneur on this, listening to this call, please get involved. This is such a huge space and it's very important. If you're an investor, you'd be crazy not to have an allocation to this space. It's an enormously important and a wealth creation opportunity. And so with that, I'll stop and you keep it moving, Alex. There's a lot of us.
Sure. Yeah, no kidding. And great points, Matt. I would actually argue that we're running our economic foundation on 70s and 80s economic theory as well. Shareholder value maximization, Friedman economics, all of that is sort of what we still hold as tight as ever in the way we construct our companies. And as we get more and more machine speed, we get better and better and better at it, to the exclusion of the other things that we could be maximizing. Yep. Sorry, go ahead.
We wrote a free book on that, Alex, called The Fifth Era, and anyone can find it at fifthera.com/ebook. It's free, and it's specifically about that topic. You know, we agree. We're moving out of the industrial era into a new digital fifth era, and a lot of the assumptions we have about the corporate infrastructure, the way we do business, the way we work, the way we play, it's all changing.
I also wrote a free Git book on this space as well, called The Lizard and the Machine, Scaling Human Integrity in a Machine Speed World, all towards that same idea.
How do we get your book, Alex? How do we get your book?
Lizardandmachine.com. I'll put it up after, lizardandmachine.com. It's just the intro part right now. I want to make it more collaborative, but let's keep moving. And maybe we can spend a little bit of time in this space, because I know Gary has done some really interesting work. And obviously, as AI gets more and more advanced and we start training it to different things, rather than sort of operating it according to these 70s and 80s economic theories, then we can really start to generate some next generation and fifth era style of organizations. So Gary, I know we've had a few conversations on this, but I would love your take on what's next for AI.
Well, so, you know, I'm a country boy from Pennsylvania, grew up in the mountain, 1,000-person village. So I bring things down to, you know, let's talk about it simply. So, I mean, in terms of education, and I was involved in one of the extremely large ICOs, and it is about education. So who was it that Alex said, you got to educate. This is like fundamental. It's like, keep it simple, stupid. I mean, if you don't do it, why do people resist? And so it's incredibly important. Then if we look at where we are today, I mean, I wrote an article in Forbes about the democratization of opportunity. Nikola Tesla's dream comes true based on his early writings. And I mean, that's where we are. I mean, people are resistant because it's not only blockchain, but 5G. Next week, I have the head of Internet of Things for Intel worldwide and Smart City, Samir Sharma, on my show. And that's exactly right. We're changing everything. The world is changing. The opportunities are being spread out. Of course, there's resistance to it. So, I mean, we've got to understand that through this digital transformation, look what's happened over the last 8 months. I remember when I was one of the first persons on Zoom, and I used to send out a link to my friends. I got it from one of the VCs of Zoom, Santi. And I sent it out, and people were like, what's this? Why do I need Zoom? I'm using Skype. And now, 400 million daily active participants later? I mean, our lives have changed. And so one is we need to educate. Of course, you need to educate the regulators. I said that at the beginning of the ICO I invested in. And, you know, I kept the back seat on it, but it's critically important. And the other thing is there are changes taking place. Now, we curate AI companies, AI and blockchain companies, by the way, from around the world, and use Silicon Valley as a port. So 2 years ago, I started a company called Eva. People said, oh, why would you do remote workforce management? Because my business is up 38x, right? Because of COVID. It's, you know, you can foresee it. I think it's keep it simple, stupid. What do? Blockchain allows it to level the playing field. You're going to be able to get banking to the unbanked, you know, payments, being able to do P2P payments. I mean, it's going to happen. Smart contracts, it's going to happen. And so the question is, how do we help educate so there isn't so much resistance? And that's it. You know, while we were on here, I just cut a deal with the blockchain company. I got it sent over in Messenger. So it's like, you know, it's hot.
Yeah.
And Matthew, can I say one thing? And Matthew, I was in the beginning in the 90s I don't know if you remember Broadvision, but I formed the e-commerce consulting company Broadian, and Pyong Chen's my mentors, Ufita, Sina, et cetera. This is bigger than that. I remember we talked about that as a $30 billion cottage industry, and people are laughing at us back in '97. Well, they're not laughing now. And the same thing on the blockchain side and ICOs and cryptocurrency. It's like, it's just going to happen. It's a matter of the resistance. Sorry about that, Alex.
All good. No, and there's the willingness to be educated often is tied to some tangible value that you can generate or is easily demonstrable to you.
Exactly, for them, right? And the benefit for them. These are like simple sales techniques.
Yeah.
I mean, it's like show the person the benefit. Don't try to shove it down their throat. I remember going to the, I'll never forget, I was at the Four Seasons in Palo Alto, and there was an ICO event, and there was a lot of geeks there, right? And they didn't know how to present this stuff. And I'm thinking to myself, seriously, if they do this, the bankers are not going to buy off of it. They're not going to educate them, and guess what, right? But it's going to happen. It just takes time. There's resistance at the beginning of new technologies.
So this is a perfect segue into the CEO of one of the leading consumer-facing platforms out there trying to break new people into the industry. So Alex, do you want to chime in on getting new users, telling that simple value proposition? You've obviously spent a lot of time getting the message out about Celsius.
Yeah, so frankly, I give the industry a D, for mass adoption. Having been there in the beginning of the internet, I wrote the VoIP patent in 1994, built some of the first gateways, billions of people use it today for free, right? We're using it right now. And the adoption was easy because, again, somebody sent you a link and you clicked on it and you were talking to someone. When you're asking people to trust you with money, adoption is just running on a completely different curve, right? And what we've seen in the last 12 years is that because of the scammers, because of all the technical issues, the regulation and so on, we're really not seeing that mass adoption that we all are hoping for, right? So DeFi is great, but again, DeFi is the same 200,000 or 300,000 users consuming their own stuff, right? And it's not really bringing a lot of people from the outside. And as long as you shower new tokens on top, maybe the party will continue. The music is not going to stop, but we're not bringing millions of people, right? So we recently partnered, for example, with Line, which has over 600 million users, to kind of enable all of their users to access cryptocurrency, interest income, several other large partners like that. So this, I think you've seen PayPal, Venmo, people like that coming into the space. So I think what it's going to take is some of these internet giants really deciding that the future, seeing again Facebook doing Libra, right? So that is what's going to get us to mass adoption. But the question is also, what is the killer app, right? What is the utility for which everybody is going to be rushing in and consuming this, right? So free communications, VoIP is very easy. What the utility is, right? We can all talk to each other. With money, the utility is interest income, and I've been saying that since 2017. Everybody thought I was a little crazy. Now everybody's looking and say, of course it's yield, So the problem is delivering that yield to the customer in a safe and reliable way. And what we have failed to do is really find a compliant way to deliver these services. I think, again, a lot of the DeFi stuff does not pass the Howey test. And the fact that they don't do KYC ML, I think, is going to become a problem down the road. So finding, I think Celsius is probably the best example of putting all that together in a compliant way, doing KYC, earning yield, putting all that together in a way that's in the best interest of the customer, right? And like you said, it's the company's purpose is to deliver profits to its shareholders. And what we're trying to do here is the opposite of that, right? We're trying to do everything in the best interest of the depositor, of the user of the platform. So the goal is not decentralization. The goal is not the blockchain. The goal is to empower the user using these tools, using this infrastructure to deliver services they couldn't consume before. Just like VoIP bypassed the whole phone network, the whole infrastructure of these monopolies, and delivered something to every person on the planet with a simple device that they could get in, access, and communicate with everybody.
Super interesting. And your point on money adoption is a very interesting one. Tech adoption and money adoption are very different curves, and that's a really interesting way to think about it. And I wonder if you said that decentralization isn't the goal, but does the ability to look through Celsius and see where the actual liquidity lies on a block explorer, does that added amount of transparency help to move that money adoption curve along a little bit? That's one of the things that I like about this space so much, is that even in the centralized plays, it's not like a bank where the reserves are completely off the grid until a quarter later. You can look into the blockchain and see what's actually happening. I mean, you don't have perfect visibility, but you can run some on-chain analytics. And
you can track. Yeah, you can track every dollar. Just to emphasize something that most people miss is that more than half of the assets on all the DeFi platform are centralized assets. USDC is a centralized asset. Wrap BTC is a centralized asset. USDT is a centralized asset, meaning a court order that says freeze this asset freezes portions of the DeFi platforms. And when we are tested with that, when that actually happens, and a whole bunch of contracts start getting liquidated because the underlying collateral got locked up, we're gonna have chaos on our hands, right? So there's a lot of things that we haven't tested yet. And again, Celsius, again, with 1.6 billion, only 10% of our assets are in DeFi. 90% of our assets, our borrowers are institutional customers, right? So DeFi lending to each other, lending to itself, is not really a scalable application. I think somebody mentioned on the panel mentioned that, hey, you can't take 50 billion worth of deployment into the crypto space. I would argue that that's not the case, because the issue with crypto is that it's an extremely volatile asset, and the demand for the equivalent of SEC lending, which is what Celsius does. 90% of our business is effectively SEC lending, right? We just don't lend securities, we lend crypto assets, 35 different crypto assets. The demand there is ferocious. If I had 3 times or 5 times the assets today, I would be able to lend it all out. So the constraints on the crypto business are actually all adoption, right? The friction at fiat accessing the crypto markets. If your broker dealer is or prime broker is JP Morgan, and you tell them that you're dealing with crypto assets, they're going to shut down your account. They're not going to give you 5x leverage. So all these things are the reasons why the capital is so expensive. So I agree, the yields are going to compress, but yes, you can take 50 billion into crypto and not into DeFi, but into the SEC lending section.
And that's interesting. And even decentralized platforms like Aave, I mean, there's an admin key that lives with a centralized player. Compound is essentially the only one who's actually decentralized the majority of their governance so far. Really interesting.
You get 3 of the Compound guys with a court order, and you have full control of the Compound platform. So right. No one is going to go to jail because they hold a portion of the multi-sig, and they're not going to give it to the regulator or to the enforcement agency and so on. So I think we're just fooling ourselves thinking that decentralized finance is really fully decentralized. Yeah. We have one leg in centralization, we have one leg in decentralization, and I think that's how it's going to be for the next 20 to 30 years. It's not going to be fully decentralized until the regulation accepts decentralization as the way forward.
I think the real interesting part, and I do want to move on to final thoughts here and start with a few of the panelists who haven't had a chance to say as much yet. The really interesting part is you're essentially running the same operations in a decentralized platform as you are in something like Celsius or Galaxy or anything like that. It's a lending pool, except in one world you can see all of the lines of code in somebody's brain. And in the other world, it's an organization that transparently reports certain things and has corporate intellectual property. And so you can sort of train them against each other of what does a fully transparent brain running a lending pool look like versus what does a more traditional brain running a lending pool look like? And that is one of the coolest exercises that's eligible or available to be done in the DeFi space right now. This is actually where our new fund coming in is focusing on fiat in and then centralized and decentralized platforms on the back end to essentially earn yield that is that 100x that you'd mentioned of what JP Morgan does. So let's go around. I want to get everybody's kind of final thoughts. We've got about 10 minutes left here. So please try to keep it to a minute. Noble, apologies, and Fred, apologies, we didn't get to too much there, but we'll start with you on the final thoughts, and please go a little bit longer if you want to.
I mean, I always love hearing all the panelists. So Alex, Matthew, they always got great insight. Gary, when I'm looking at this space, we're heavily in gaming, and I'm the CEO also Wordplay Games, and so we focus a lot on what's happening in that sector, particularly with the gambling component and how that's starting to intersect more with the blockchain. And so I'm liking more of the NFT component, the non-fungible token space. Alex said something that was very, very clear, and having a finance background, yield is what the byproduct of money is, but there's also a second component too, and that's appreciation. We have a very difficult time finding a world where millennials actually are able to appreciate or create value. Most of them can't afford homes. They're not buying cars, and they've been trained for the last decade plus to rent everything. So they rent their entertainment, they rent their cars, either by the hour or by the week. They rent their homes or continue to live with parents. And so the non-fungible token space is a really a significant opportunity to start gaining value and to go beyond what's happening in a currency trading or fiat environment with crypto, regardless of what the yield is. And so with the non-fungible tokens, there's an opportunity to build value where you can acquire something, it has a specific value on day X and has the opportunity to increase in value on day Y. And that space in the DeFi conversation is evolving rapidly. You have Wax, which just went to a cross hybrid model, and we've been tracking Wax for a while. We have even things coming out on Wax NFTs. And the fact that they're now starting to do a DeFi token to allow people to benefit off of their NFTs or non-fungible tokens is pretty amazing that they've left Ethereum, went to EOS, then jumped back on a hybrid Ethereum DeFi model, still just delivering NFTs. And there's something there. The fact that someone can own a quote unquote a digital Rembrandt, whatever that looks like, and it can increase in value regardless of what the underlying crypto asset is, has a significant impact on a generation that doesn't own anything. They've never been trained to own anything, and are suspicious of both stocks. Robinhood has literally done a complete disservice as a pseudo, pre-DeFi concept, right? That is an egalitarian way for regular investors to participate, and yet they sold all their traffic, even though it was stated and clearly in the documents, they sold all the traffic and allowed major corporations to front run on them. That's definitely anti-decentralized, right? So, you have a group that's highly skeptical on a lot of levels of the establishment, but at the end of the day, they'll never have enough money to buy a home. And I think NFTs and, it's great to have a 6, 12, 30% yield, but 30% on $100 is still $30. So when you have opportunities to have something that you buy for 100 and it turns to 10,000, that's where I think there's an accumulation of wealth and there's an opportunity. And so in this conversation, we've been very excited about what non-fungible token assets look like. We like the idea that the skin gambling is kind of starting to evolve and change and move to an NFT concept, which is by itself $6 billion industry. So, there's a lot of opportunities when we start talking about where fintech and blockchain kind of evolves to, that goes beyond trying to convince people to join, but allowing people who are now disenfranchised to participate.
Right. And I think there's a way to merge those two streams by starting to be able to use NFTs as collateral. So once we can actually create NFTs and broader pieces of collateral, because that's one of the challenges right now from an exclusivity perspective, is to access loans, you need to have the collateral existing. And that by itself is a bit of a different mindset. Frederick, please, let's move on to you.
I'll build on Noble's ideas here. So something I'm really heavy into is in real estate, and if you combine then the whole way of how to tokenize, so I think that might be one way how to make millennials more interested in ownership, where they can fragment and have everything tokenized through blockchain technology, basically. And that is very, very often combined also with the aspect of a fintech, where you got the platform setting all of those things up. And I was about to mention that I think one reason, coming back to one of your first questions, like how to get more money into this whole aspect. I wrote a book called Trust is the New Currency. I think the matter which is blocking money to come in is trust. And that is stopping the whole thing. And if the market would tune in better, then connect with the customers, that would be better. Furthermore, to have more positive press, now it's a lot of skeptics out there, would help. As well as over time, this can be shorter or longer depending on how well the other factors are working, ultimately to hopefully get total trust for this whole very new concept. So yeah, I'll pause there.
Very interesting. Yeah, we did a little bit of a bottoms up analysis on what the trust friction was in the world, and by taking out all of the reconciliation, all of the wasted ads, all of sort of this ethereal digital concept of trust. And we got to kind of like $2.5 trillion. That was sort of our addressable market for our venture fund one. Very interesting. So trust is the new currency. Check it out. Fantastic. Alpesh, we'll go to you next, and then we'll just do a quick roundtable of where people can find you.
So it's great to listen to all of you guys. I think the theme that I'm getting through and the theme that I see in the market is really, how do you get this mass adoption? How do you integrate the existing world? You know, Alex is saying it, the existing, Alex Mashinsky is saying it, you know, the existing world and the crypto world. That's one big one that I see is a driver. Secondly, helping people understand it. One of the biggest challenges is, you know, it's hard to understand. You know, if you've been in the market, you've been in financial services and you've been in crypto, then understanding DeFi is actually not too bad. You can understand it, but most people will not understand it. So simplifying it so that people can understand what the value is for them and how they could invest and make money, or invest, or use these two new types of financial services, I think is another one. And thirdly, Irina said it already, is regulation. You know, people, if you want institutional investors in, then regulation has to be there, and any investor has to be comfortable that frankly their assets are safe under whatever jurisdiction you're in. Because part of the challenge is DeFi and crypto is a global phenomenon. The challenge is people live in a particular country and regulation is country-based, not global. So again, how do you mix the two? So they're the 3 points that I'd make.
Very interesting. Thanks very much. And where can people find you, Alpesh?
I'm on LinkedIn. You can find me. It says Alpesh Doshi there. And on Twitter at Alpesh Doshi as well. Great.
And let's just do a quick round of where people can find you. Jim?
Yeah, JINWJUNG1 in Twitter or LinkedIn, please. Yeah.
Fantastic. Sohail?
Yes, everyone, thank you so much. And the best place to find me is LinkedIn, Sohail Ahmed MBA, or on Twitter, Sohail Ahmed, exactly as it's spelled.
Fantastic. Jose?
You can find me on LinkedIn under Jose Graca, or just search up BizMoney, and you will find me for sure.
Excellent. Matthew?
I should have done this before. There we go. I just put it up on the screen. Take a screenshot, put .com on the end of either Fifth Era or Blockchain Co-Investors, and you'll find us.
Excellent. Alex?
Celsius.network is the website. Ed Mashinsky is my Twitter. And if you want to shoot me an email, alex@mashinsky.com, or just Google Mashinsky, you'll find plenty.
Excellent. Irina?
Google me. I'm everywhere. Twitter or LinkedIn message is good.
Fantastic. And Gary?
Yeah, so Gary Fowler, LinkedIn. You can check my show out. I do it every 2 weeks. Samir Sharma from Intel is going to be on next. GSDVS, Get Shit Done Venture Studios is my company. Check it out, gsdvs.com. I'd love to hear from you. Thanks, Alex.
No problem. And myself, I'm Alex McDougall for VC TV. Thank you so much to the LATOKEN team. You can find me on LinkedIn at Alex McDougall, Twitter, Alex M. Bicameral, and our wonderful in progress Git book, lizardandmachine.com. It's been fantastic to have all of you guys on this panel. I think we covered a ton of ground in a really interesting format. So watchers, audience, please get in touch with us. There's a lot of capital, a lot of horsepower, a lot of